We will walk through how Danish businesses can correct VAT registrations quickly and confidently before critical deadlines, minimizing risk and avoiding unnecessary scrutiny from the tax authorities. Operating in Denmark means working within a highly structured, digital-first tax environment where Skattestyrelsen expects accuracy, timeliness, and a clear audit trail. Yet even well-managed finance teams encounter errors, misclassified transactions, missing purchase invoices, incorrect VAT codes in ERP systems, or late credit notes that land just after a VAT return has been submitted. The key is not to avoid every small mistake, which is unrealistic, but to design a robust, repeatable process that allows you to identify, correct, and document VAT deviations quickly, ideally before the reporting period closes. Let's start with the basic principle. In Denmark, VAT is largely self-assessed and heavily data-driven. That gives you both an obligation and an opportunity. The obligation is that your returns must reflect reality as closely as possible at the time of filing. The opportunity is that many corrections can be handled efficiently through your next VAT return, provided you understand the thresholds, documentation expectations, and the way Skattestyrelsen interprets good faith behavior. A fast correction is only valuable if it is also credible, so speed and control must go hand in hand. To achieve this, think in terms of a short, disciplined VAT correction cycle embedded in your monthly or quarterly closing process. First, strengthen early detection. Before each deadline, run targeted checks on your Danish VAT ledger. Look for unusual movements in output and input VAT compared to prior periods, large manual journal entries posted close to month-end, and transactions coded with non-standard VAT codes. Simple exception reports from your ERP or accounting system, combined with high-level analytics, can reveal mispostings within hours rather than weeks. For many companies, instituting a standard pre-filing VAT review, no matter how lean the finance team is, significantly reduces the number of post-filing corrections and gives you a few days of buffer before the official deadline. Second, act immediately when you discover an issue. If you identify a misclassification or missing invoice before the deadline, correct it directly in your current return rather than deferring to a later period. That means updating your accounting entries, aligning your VAT codes, and recalculating the figures in the relevant boxes of the Danish VAT return. Keep a concise explanation in your working papers that describes what changed, when, and why. This will be essential if Skattestyrelsen raises a question months later. In many cases where the net impact on VAT payable is not material and the correction is clearly documented, the authorities will view it as part of normal business practice. Third, understand when and how to correct after a return has been submitted but before the statutory deadline for adjustment. Danish VAT regulation allows for corrections in subsequent returns, but the appropriate method depends on both the size and nature of the error. For immaterial discrepancies, you may be able to correct through the next ordinary VAT return by adjusting the relevant boxes and maintaining clear internal notes. For more material errors, especially those that indicate a systematic issue, such as a misconfigured VAT code affecting an entire product line, it is often advisable to prepare a structured reconciliation and, if needed, proactively inform Skattestyrelsen through the channels they recommend, typically via their digital communication platform. Early, transparent engagement tends to reduce the risk of penalties and signals that your organization takes compliance seriously. Fourth, use deadlines as a governance tool, not merely an administrative constraint. Establish internal cutoff dates several days before the official Danish VAT deadline to finalize reconciliations and freeze data for review. During this window, your finance team can focus exclusively on variance analysis, error detection, and documentation. If you operate across multiple entities in Denmark, implement a consistent calendar and set expectations for each local finance lead or shared service center. Fast VAT corrections are not driven by last-minute heroics. They are the product of disciplined, predictable routines that leave time for judgment and escalation. Fifth, invest in process automation where it makes sense. Danish businesses benefit from a relatively high level of data consistency and digital infrastructure, which makes automated VAT checks both feasible and effective. Simple controls, such as automatic flags for invoices with missing VAT registration numbers, transactions with zero VAT where standard Danish rates should apply, or unusual reverse charge patterns, can be implemented in most modern ERP systems without major projects. By catching anomalies at the transaction level, you reduce end-period surprises and shorten the time needed to diagnose and correct errors before the VAT deadline. Sixth, never underestimate the importance of documentation. For every fast correction, ask, could we explain this clearly to an auditor in 18 months' time? Your file should include a short narrative of the issue, screenshots or listings of the impacted transactions, the calculation of the correction amount, and proof of the adjustment in both your general ledger and the VAT return. This level of clarity supports you if Skattestyrelsen performs a targeted review, and it also protects institutional memory when team members change roles or leave the organization. Finally, be mindful of patterns. If you find yourself repeatedly correcting the same type of VAT issue in Denmark, such as intra-EU supplies, chain transactions, or domestic reverse charge on specific industries, treat it as a signal, not just an operational nuisance. Conduct a root cause review, possibly with external advisors, to update your VAT determination logic, customer and supplier master data, or user training. The goal is to migrate from reactive corrections to structural prevention while preserving the ability to react quickly when new scenarios arise. To summarize, executing fast VAT corrections in Denmark before deadlines is about much more than technical tax knowledge. It is about building an integrated cycle of early detection, rapid but controlled adjustment, consistent documentation, and continuous improvement. By combining data-driven checks, clear governance around deadlines, and a proactive stance towards Skattestyrelsen, Danish businesses can reduce compliance risk, free up finance capacity, and demonstrate the level of control expected of leading organizations. If you embed these practices into your regular close process, VAT corrections become predictable, manageable, and significantly less disruptive, allowing your team to spend more time on value-creating activities and less time on firefighting last-minute compliance issues.